It's great to be here with my two colleagues. I must say I spent my lunch looking at this photo wondering what Karen knows that Guy and I don't know, but maybe you can tell us after we finish. Look, I was here at this event exactly 12 months ago and I made my first presentation as an APRA member. The speech, I think, was rather aptly titled APRA in 2019, an evolving approach, a consistent purpose, and it outlined APRA's supervisory priorities for the coming year. Looking back now as the coming year turns into the going year, I doubt many of us could have fully anticipated the extent of the evolution that we're about to embark on. One of the primary areas where APRA has evolved its approach over the past year is in the area of transparency. In line with prudential regulators globally, APRA has historically been economical, say that, with the information it disclosed. This caution stemmed partly from legal restrictions on what APRA can say under various acts, but more importantly, a belief that financial stability was best served as a prudential regulator that conducted its work out of the spotlight. I think it's fair to say that mindset has undergone a significant transformation. Rather than viewing openness as a potential obstacle to fulfilling our mandate, transparency is now being harnessed by APRA as a tool to achieve better prudential outcomes on behalf of the Australian community. Over the next 12 months, APRA will increasingly open up on its actions, decisions and assessments of entities as a means of informing our stakeholders, influencing behaviour and driving accountability, both for ourselves and for the entities we regulate. APRA's updated corporate plan for 2019 to 2023 identified 4 strategic focus areas: resilience, improving outcomes for superannuation members, improving cyber resilience and transforming governance, culture, remuneration, accountability across regulated financial institutions. The plan also identified that to deliver all these outcomes, APRA would need to lift its capability in a number of areas, and one of those specifically was engagement underpinned by transparency. APRA's commitment to greater transparency necessarily has some limits. As APRA Chair Wayne Byers noted recently in a speech to journalists at a media awards event, there are good reasons why prudential regulators such as APRA must conduct their affairs with a degree of discretion. Beyond the secrecy provisions of the APRA Act, there are some instances where disclosing our concerns about, for an example, where an entity's financial strength might be a concern, could undermine efforts to shore up its position and resolve it safely. But, as in so many areas of APRA's work, APRA has to find an appropriate balance between candour and confidentiality, and we will do that. APRA knows that it cannot operate solely behind closed doors, but nor can we fling our doors open in a manner that may inadvertently harm community interests. Linked to this greater transparency has been a big push by APRA to explain ourselves better. We want to communicate more often and in language that can be understood, and that's no mean feat for a prudential regulator, I can tell you that. Following on from our updated corporate plan this week, we published an information paper setting out how APRA will balance its objectives, including financial safety, efficiency and competition, to make sure that the financial system is a safe one. We are doing more speaking engagements, we're doing more media briefings to help get our messages across and better explain to the public our mandate and what we do. Until recently, APRA routinely issued about 30 to 40 press releases a year. This year we're up to 84 and we've got a few more to come. The clearest evidence I can point you to of APRA's new approach on transparency has been in the area of enforcement. The catalyst here has been the Enforcement Strategy Review, which determined that APRA could achieve better prudential outcomes by being more willing to set public examples when enforcement action was taken. It took little more than a month for us to put in practice with a media statement announcing APRA had issued directions to the IWF group for failing to comply with licence conditions. In June, we published the decision to impose directions and new licence conditions on AMP Super. We announced the decision to impose additional capital requirements for 3 of the 4 major banks and 1 insurer, and we publicised our decision to force several banks to tighten intragroup funding arrangements for their Australian operations. And finally, a decision on Westpac as well. As some noted at this time, this was a significant departure from past practice. In September's update to the enforcement approach, we outlined how we will increase transparency on the use of formal enforcement powers and made clear when we would and would not publicise enforcement actions. Although every case has to be considered on its merits, our stated practice and preference is to publish enforcement decisions unless we believe that that creates risk to the interests of an institution's beneficiaries or broader financial stability. We are now in the process of developing an overarching philosophy for our entire approach to industry supervision. The supervision philosophy document, due for release early next year, is based on 5 foundational elements, which together will contribute to delivering a sound and resilient financial system. One of those elements is being open. In practice, this will see APRA use transparency as an additional measure to lift and reinforce industry standards across a whole range of areas. The precise framework we are still finalising, but I can tell you it will have 3 key objectives. First, to inform, explaining to industry, government, investors and the general public our overall supervisory approach, method and intensity. We want to influence, using clear communication to convey messages, deter misconduct and promote better practice and enhance public confidence in the financial system. And thirdly, we want to drive accountability. If we believe that publicising an action or decision achieves those objectives, we will be putting it out there. Another area where APRA will publish more information about entities we regulate concerns their efforts to improve on governance, culture, remuneration and accountability, or GCRA. I mentioned earlier the additional capital impost on several entities in response to weaknesses uncovered on risk governance. Next week, APRA will release a new information paper outlining our future approach to regulating, supervising and enforcing GCRA issues among our regulated population. That approach will involve a greater use of both CBA prudential inquiries and deep dive thematic reviews. Going forward, under the terms of conducting these reviews, we will generally be making the findings public and releasing GCRA self-assessments as an additional tool to deter poor behaviour and promote better practice and enhance accountability. We'll have more to say when we release that paper next week, but what I can tell you now is that the level of public disclosure we envisage will be at the forefront of international best practice when you look at our peer regulators. We're also going to be more upfront about APRA's assessment of entities' performance, and nowhere is that more evident than with the forthcoming release of the My Super heat map. A few hours ago at the ASFA conference, my fellow Deputy Chair Helen Rowell unveiled the metrics method and presentation of the heat map, which will be a key tool to support the escalation of APRA's long-term efforts to weed out underperforming funds. Publishing our views of which My Super funds and products are underperforming and where they need to improve turns up the heat on those trustees to lift their games or reassess whether they should exit the industry. Making it easier to assess and compare fund performance also empowers other important stakeholders, including members and employers, to ask hard questions and make better informed superannuation decisions, and we think that's very important. On data, for the time being, the heat map doesn't cover the choice sector, but work is underway to address this with the launch last week of our superannuation data transformation. This multi-year project is the largest data collection consultation APRA has ever done. Phase 1, which is now underway, will broaden the collection of targeting long-standing gaps around choice products and investment options. Phase 2 will deepen the collection by providing a bit more granularity, and Phase 3 will be about assessing and consistency. The superannuation data transformation will deliver the most accurate picture yet of an industry that manages assets worth 1.5 times Australia's GDP. Consistent with our commitment to greater transparency, we will publish as much of that data as we can. Indeed, one of the issues that we will be consulting on is a proposal to determine that all superannuation data we collect is non-confidential and therefore able to be publicly disclosed. Superannuation isn't the only industry that will be subject to increased transparency through the publication of new and better data. We recently replaced our monthly banking statistics publication with a monthly ADI statistics publication, which includes never published data on credit unions and building societies. Life insurers have also found themselves exposed to greater scrutiny through a world-leading joint data publication between APRA and ASIC that makes it easy to compare life insurers' performance in handling claims and disputes. Central to all of this is our data modernisation program. The increased functionality of the new data collection solution due to come online next year will support initiatives to enhance the quality, consistency, reliability and variety of industry data we collect. Other aspects of the program are aimed at increasing the scope and accessibility of what we make available. We are mindful of increasing interest in our data publications which are aimed at industry rather than the general public, and consequently we are examining how to present data in more accessible and flexible ways that enable greater usability by a much broader audience. So, with financial stability and the soundness of institutions at stake, APRA must always think carefully about what information we make public. For that reason, our growing appetite for media engagement is unlikely to see me feature on breakfast television or talkback radio, but financial stability requires more than just a strong balance sheet, a competent board and prudent risk management. It also requires trust and confidence, both of which have been tarnished in recent times. Greater transparency conducted carefully and strategically can enhance financial stability. APRA's direction will no doubt create some discomfort for some of the entities we regulate, but by informing, influencing and driving accountability, APRA will harness transparency as a tool to promote better practice and deter poor conduct. And finally, importantly, opening up on APRA's actions and decisions will help to restore public confidence that Australia's banks, insurers and superannuation trustees are being held to account for their performance and the outcomes they deliver. Thank you very much.